Hi everyone, welcome back to my channel. This is my usual weekly technical analysis outlook videos in which I will comment on what I think will happen to some FX crosses and equities. I have another series running, the Financial Market series, that breaks down topics in the financial market in ways that are easy to understand. You can find the links in the description about these videos. As always, before I begin, I want to clarify that this is not a solicitation or recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not financial advice, and if you're using this content as a guide to trade, you are doing so at your own risk. Alright, let's start. I don't have enough time to do a review of the names I covered in past videos, so this week's video I will focus only on new coverage as well as names that I will no longer cover due to invalidation of chart patterns. The new coverages are dollar Sing, dollar Ringgit, Sing Ringgit, and Skechers USA. In case you don't want to know the old stories, you just want to know what is new, I have put in timestamps in the description for your convenience. First up, names that I will no longer cover are S&P 500, Meta Platforms, Dell Technologies, and Bank of New York Mellon. For S&P 500, this is because the double top that I highlighted in the video on the 8th of September was invalidated on the 19th of September. Over here, I would caution against positioning for excessive upside because there was a gap up on the 19th of September, which could eventually be filled via a decline and possibly the start of a downtrend. The second name that I will no longer be covering is Meta Platforms. I said that Meta has potential to be forming a double top in the video on the 25th of August. But this bearish pattern was invalidated on the 19th of September. Now, this does not mean the risk of Meta turning bearish has abated. It just means that the bearish pattern has been invalidated. If you take a look at the last two price action, they were excessively above the upper Bollinger, and this could trigger a decline, at least in the form of a correction going forward. Also, a lower opening in the next session could form an evening star formation, which is a bearish signal. So do take note of this. I will also be ceasing coverage on Dell Technologies now that it has closed firmly within the cloud and likely has invalidated its downside bias. Over here, Dell Technologies initially performed quite well, breaking below the symmetrical triangle and heading towards the textbook target of 82.9 before rebounding. And ever since closing within the cloud, the Ichimoku cloud, I believe that the downside bias has abated and upside risk has increased. This is the reason why I will be ceasing coverage on this name. Now, this name gives us a very good example of the divergence between the real market and textbook. The textbook target was at 82.9, and after completing the symmetrical triangle, Dell fell to only 86.93, hence the divergence. This is actually better than most expected performance, falling nearly 90% towards its target. Let me show you the Fibonacci retracement level. Below the 78.6%, close to 90% before rebounding. I will also no longer be covering Bank of New York Mellon in future videos because the rising wedge that I point out in the video on the 8th of September was invalidated last week via a search to break out of the resistance trendline. So a bullish outlook has now been affirmed. Now, if you've been following my past videos, you know I like beaten down names. Dollar Sing, US dollar against the Singapore dollar, is a beaten down name that I have been observing for the past few weeks. This cross fell from a high of 1.3670 in April to a low of 1.2882 on the 18th of September, marking its lowest level since November 2014. This bearish trend is a result of a head and shoulders top that had a textbook target at 1.3215. Here we can see that dollar Sing has greatly exceeded its textbook target. This can happen because textbook targets do not mean tops nor bottoms. It is starting to show signs of a reversal in recent weeks. Here I am suspecting that dollar Sing is forming a bullish pattern called a falling wedge. And we can see that there is divergence between the price and the momentum on the RSI, as in the price goes lower and lower, but the RSI goes higher and higher. So what needs to happen next is, if dollar Sing breaks out of this resistance trend line, a bullish outlook is confirmed. This bullish pattern has a textbook move of 179 pips. Next beaten down name that I have for you is dollar ringgit, the US dollar against the Malaysian ringgit, having fallen from a close to 4.80 to a low of 4.18 on the 20th of September. This downtrend was due to a double top, a bearish pattern, and the textbook target was at 4.3757, and we can see that it has greatly exceeded it. In recent weeks, I believe the dollar ringgit may be readying for a rebound, because I think it is forming a falling wedge, a bullish pattern, and we can see that the RSI is also showing price momentum divergence, and more so, the latest price action over here on the 20th of September has greatly exceeded below the lower Bollinger. This usually leads to a rebound. So what will turn this cross into a bullish outlook is a rebound to break out of the resistance trend line. And if this happens, this will suggest a textbook move of 2,128 pips towards the upside. I've talked about dollar Sing as well as dollar ringgit. The last beaten down name for this video is obviously on Sing ringgit, Singapore dollar against the Malaysian ringgit. It is showing all the signs of a reversal that dollar ringgit is showing. A falling wedge, price action greatly exceeds the lower Bollinger, and price momentum divergence on the RSI. The latest price action is also a downside exhaustion candlestick, suggesting a near-term rebound. So a breakout above this resistance trend line will confirm a bullish outlook, and the textbook move is around 1,240 pips. The last name for this video is an equity called Skechers USA, an American apparel company. Price action development in the last 3 weeks suggests that the second shoulder over here may have been formed. It is part of the head and shoulders top, a bearish pattern. The neckline is upward sloping, and I would estimate it to be around 57.4. Note that last week's price action attempted to break above the 20-week simple moving average and eventually got rejected pretty strongly, I must say, suggesting a lack of upside strength. The completion of this bearish pattern is via a breakdown below the neckline, and if this were to happen, the textbook target is at 38.8 over here. And note that there is one support at 46 that can bounce Skechers higher when tested. That's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and in the next video, it will highly likely be on new crosses and new names. If you like what I'm doing, please help me out by giving me a like. Please subscribe and hit the notification button for more videos like this.